Guys, we have Mr. Scott Bauer from Phoenix, Arizona, and Scott is, well, let's bring Scott on. Good morning, sir.
Hey, good morning. How are you?
Very, very well, my friend. Thanks so much for being on.
Yeah, I mean, we definitely have a lot of stuff going on in a lot of good ways. Super busy, but also being very, very productive. That's probably most important.
Well, that's it. So actually, or, just doing something doesn't mean you're going to be productive, right?
Right, right.
All right. So you have been with NoteSchool about a year and a half now, and you came in with, well, why did you decide to learn the creative finance side of the business, Scott?
I've done a really good job of mastering, the standard side of investing in real estate, really understanding how to fix and flip properties, buy and hold properties as rentals, to wholesale properties. I know that side of the business pretty well as the retail side, right? That's where I originally started. But what I found was that there is a lot of opportunity that's left on the table when you use the standard investment model. And so I wanted to try to take a hold of those leads that I couldn't otherwise convert and actually turn them into money. Because of course, in any business, every lead that you pay for you had to pay for it. And if you can't get a return on that, then that's not what you're looking for.
That's true. So Scott, what you're saying is, and kind of the average from a lot of the guys that are doing like you do on a daily basis, we kind of figured out from input from you guys you guys told us what you were, your pain was, and you were getting really about one wholesale deal accepted out of 20 deals. And we said, well, what if we could show you how to close 2 or 3 of those 20 instead of just one of those 20? And so that was when you said, oh, okay, well, let's do that. So Scott, we're going to go in, and I am going to go to a deal that you did here. Well, what was it? September of 2020.
It was September, I believe, was exactly when we did it.
Right.
This deal's a great deal, by the way. Love to talk about this deal.
So this is well, we'll unpack it, Scott. We don't want to give away the punchline just yet. So Scott, tell us a little bit about how this came across your desk and kind of what happened with this, right?
So this originally came across the desk as on a pay-per-click lead. Came in just like any other lead out there. Nothing special. Once we were kind of looking at the opportunity there, it really made a lot of sense to structure it the way that we did. I don't know. How do you want me to, what else do you want to know about that?
Here we go. So Scott, it looks like the seller said, I want out. And this was a mobile home, but it had been built onto. Tell us a little bit about the condition and all that. And, it was good condition, and the seller just needed to move it quickly.
Correct. Yeah. So the condition was really, really good. Her and she raised her 2 kids there. They were still living there currently, and they were wanting to move out. Her family had this property for quite a number of years and had actually added to it. And it changed it. It looked a lot like actually a single family house instead of a mobile home. So they added value. The other big benefit to this property is that it's on a 10,000 square foot lot, which, is a good amount of space that was owned by the property, right? And it was in a fixed mobile home, meaning that it is affixed to the land, therefore making it real property. That really made this attractive because I knew that there were several different options I could make this deal really work.
Right. Well, with the shortage of inventory in your area, like it is everywhere else, I mean, this certainly made sense. And this would have not been a deal that would have been bankable. Would you agree with that, Scott? I mean, literally, you couldn't have gone to Bank of America or Rocket Mortgage, and if somebody were looking to buy this, right? Because of the type of property that it was and the price.
Well, yeah, I mean, so this is a mobile home that technically was built in 1973, I believe. And because of HUD rules, if they're built before August of 1976, you can't finance them through a traditional bank. Right. So this isn't a financeable property, period.
Right. So she said, look, I want $50,000 cash, and you went out and you found $50,000, right? And if you didn't have the money personally, you could certainly go out to a private lender and get low cost funds to get that 50 grand, right?
Absolutely. Matter of fact, I mean, I did just use my own cash for this because of it being, 50 grand, but I have lenders that are on the side that are waiting for opportunities just like this to lend on.
And when you talk about lenders, you're not talking about Bank of America. You're talking about private lenders that have some funds and you can borrow at, 6% or something like that. So, okay.
Yep.
So you buy this thing, you write the check for $50,000, you own it. And really you didn't, I think you told me you didn't have to put anything in this or very little, right?
Well, I actually put all of $0 into this property.
Oh,
so
Where did you get
that was a really good win.
$0 from, man?
Well, it was a tough find, really, but it was, I got through it pretty easily, really.
Okay. So you buy it for 50, you pay her for the $50,000, you own the property. So you advertise this on Facebook Marketplace, right?
Correct. Yep.
So, and you kind of did an ad that basically said private loan available to a well-qualified buyer with a large down payment.
Correct.
Right.
Yep.
So how long did it? This is kind of funny because when you told me this, you said you posted that thing one afternoon, that you were looking for a buyer for this property and you were going to finance it. And you only had one or two, right? Now, the joke is you had several people contact you immediately, right?
Yeah. I mean, we had a ton of people that reached out right away. So, and I don't know, do you want me to dig into what you're going to get out of Facebook Marketplace and another key point that you want to make sure that you do if you're going to market there?
Yeah, quickly. Let's just talk about it real quick. Yeah.
Okay. So the marketplace is a phenomenal place to advertise properties because you got a lot of lookers there. The negative side of it is that you get a lot of lookers, right? So not everybody that's going to inquire about your property is going to be qualified to buy it, qualified to have the down payment, etc. So you are going to have to sift through some people that way. One of the most important things that I actually did not have to do on this specific property, but I have since had to do this, is you need to boost your property when you put it out there. Because if you just try for organic searches or organic people to look at it, you're not going to get nearly the viewers that you're going to get if you boost it for $100 or $200, because you'll get a great, a larger amount of people that are looking.
Got it. But Scott, here's the thing. It is a whole lot better to have some people to sift through than nobody to sift through.
Yes. And
go ahead.
You'll know pretty quickly. So let's say that you put a property out there and you get nothing. You get crickets. You get people that are just, nobody's responding, nobody's commenting, nobody's doing anything that way. You got one or two things that have really happened. Most likely, number one, your price is too high and unrealistic and unreasonable. Nobody's looking at it. Or two, maybe just have one ugly property that is just terrible and you're asking too much money for it. I don't know.
Well, and so some people may be thinking, Scott, that, well, you bought it for 50 and you sold it for 125, and you go, wow, that's a pretty good lift between the buy price and the sell price. But again, this person that sold this thing, she was ready to sell it, and you had the cash, and you just made the deal, right?
Absolutely. And this, for this model, this really makes sense. And this is why, like, I want to make sure if I'm going to do a deal like this, I'm going to put a creative finance deal together, I want to be making a 20% return on my money or better. Now, this specific property is absolutely phenomenal because it's a 36% return on my money per year, but it doesn't have to be that way. It could go down to 20. Now, a good rule of thumb for that I've found is that if you basically double your acquisition price for the sale, you're going to achieve that number, right? That's kind of what that's kind of what I've determined.
Figured out in your model there, right?
Yep.
And a lot of folks would have not even, would have thought, no, I can't do this deal, but this is what was the perfect deal to do. So, Scott, you advertised it on Facebook Marketplace, and you had some buyers come in. You picked the one that probably had the most down payment. You sent them over to an RMLO, residential mortgage loan originator, so that the loan was Safe Act compliant.
Yep.
They have 20,000 to put down, so now you've got a $105,000 note, and at 9.9%. And some folks would go, "Oh my goodness, that's kind of a high." No, this rate fits the type of property and the price band of the property, right? 9.9. And so what you've done then, Scott, is you've created a cash flow of $914 a month, principal and interest, for the next 30 years. So my question
Just
is, go ahead.
I was going to say, everybody that's listening to this, let that sink in just a little bit. And there's another very, 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 very important part about that I really want to make sure everybody understands. And what that point is that I'm not paying the taxes. I'm not paying the insurance. I don't pay for maintenance. I don't pay for repairs. They're not calling me when the dishwasher breaks. They're not calling me if there's a AC leak. Nothing like that. It's just strictly passive flow per month, every month.
So, Scott, when you get that $914 check, right, you don't have to take anything out of it. That is your cash flow. Now, little rule of thumb here: what would this place rent for if you rented it out?
So, a similar type property like this is going to rent for about $1,300 a month.
Right.
So, I am dramatically, $913 P&I to them, or $14, whatever it is, per month is a great deal. All in taxes and insurance, it's just over $1,000 for them a month.
Right. So they can own this 250, let's call it $200 a month less than they can rent it.
Yep.
So some of the folks are saying, "Well, gosh, but Scotty only got 20,000 of his $30,000 back." But you wait 36 months, 32 months, whatever it is, and you've got every dime back. So then you've got another 27 years of cash flow on this. But the other side of this, and let's just unpack this so everybody can see it here, right? There it is, 105, 125, 20 down, 9.9, 30-year cash flow. So, Scott, you could do something else with this. You could, after you season it a few months, which you've already done. You did this in September. I think the first payment may have been due in October. You could sell what we call in the note business a partial on this and get the rest of your money back, actually more than the rest of your down payment back.
Yeah, if I had a need for, if I wanted some cash, if I wanted to get that 30,000 back, and like you said, I could actually get quite a bit more than that back.
Right.
If I sold a partial of this note, I'd get all my money plus more. I could then turn around and use that money I get back to go buy another one of these, and then therefore. And I guess the other part is the partial only sells a partial of the payments. So let's say I'm going to this is a 30-year note. If I'm going to sell 10 years of the note, that means that for 10 years, I won't receive any of these $914 payments per month. But after that period's over, for the next 20 years, all of that money goes back to me. So,
that's right.
So not only do I get my money, but I also get to use it later too. So I get my cake and I get to eat it too. It's great.
I like that. I like the cake and I like to eat it too. So that's exactly right. And there are many, many other strategies. Scott, we could pledge this loan as collateral, borrow money against it, and make a cash flow every month if, make a difference between what our loan would be and what this payment is. So there are many different things we can do with this. So here's the big deal, Scott. Here's what we're talking about, right? When we're talking about this. So over 30 years, the cash flow on this thing is $349,040. Now, let's look at what you're really, because you got some money in this, right? So you bought it for $50,000. You got a $20,000 down payment. You receive 360 payments of $914, which is $329,000. So when you look at all that, your real profit is, let's just call it $300,000. So you've got you really only have $30,000 in this, and over time it pays you $300,000.
I believe they call that 10x, but there is, It's a phenomenal thing, because if you look at this, if I was to take this hat off, right? If I didn't know the knowledge that I know now, I would have passed on this deal maybe, right? I would have said, no, that's the mobile home. It's not financeable, not a deal, no go. And I would have just let it go.
Right.
But instead, we looked at the opportunity using, the strategies we use that I've learned through Note School, to be able to realize the opportunity here to make $300,000 on a $30,000 investment.
Right. And so we'll pull the slideshow down, but here's the thing. You're exactly right. Again, a lot of people would say, oh, but it's an older mobile home. But look, it's a house. And here's the bottom line, Scott. That is affordable housing. And somebody may say, well, I wouldn't want to live in that kind of housing. Guys, that is someone's castle. Would you agree, Scott?
Yes.
You would live in someone's home ownership that would have never had it.
Yep. No, good. If somebody doesn't want to live there, great. Then this isn't the property for them. But somebody does, and especially in a low inventory environment like we're in now, they won't be here forever. Let me make sure everybody understands that. This low inventory environment is great, because now I can not only provide financing to somebody that may not qualify for it in any other way, but now I give them a chance for home ownership, which is, some people's ultimate dream. So
that's right. I mean, that's still the American dream. Hey, Brian, why don't you jump on with us, and if you've got the couple of things you want to add to this, and we'll take us out here in a sec.
Yeah, you bet. So first of all, one of the things, and thanks Scott so much for jumping on and sharing with us. It's always, I think, very valuable for just other investors to kind of hear like this is working in your business. And, I started this whole thing talking about how can you double your deal flow? Can you double your profits? And I think it's not only is Scott obviously doing more deals, as he said in his own words, he monetized the deal that he typically wouldn't do. But the interesting thing to me was the doubling your profits or tripling your profits. It doesn't even matter which way you look at it. A lot of people want to get double-digit returns on their rental properties, and then they just act like the expenses and the overhead and that kind of stuff never happens, right? So even if you want to get double digits, you can double. He's tripling his just return on investment, right? Not to mention, obviously, from a revenue standpoint, he's creating, like he said, 10x the amount of revenue on his investment. So it's really, I think it's such a great example of looking at a deal from so many different angles and allowing lots of different investors to look at it through their lens and say, I see how I can do more deals and I can do more profitable deals as well. So really appreciate you.
Scott, what is the name of your company so everybody knows if they want to check you out online?
Yeah, please do. My company's name is HBSB Holdings, hbsbholdings.com. Make sure to check it out. It's here in sunny Phoenix, Arizona. For those of you that are curious, what does HBSB Holdings stand for? Stands for Homes by Scott Bauer. That could be an easy way for you to remember.
Homes by Scott Bauer. Well, there's a big bank, and it's the HSBC, right?
Yep.
Bank, yeah.
Yeah, Scott's soon going to own that too.
Yeah. Well, I don't think I'd be on that.
And Scott, has your deal flow just kind of, we were talking the other day, and you were telling me that, it's just the deal flow just keeps going up, and whether it's whether it's creative finance deals or cash deals, you still do both, right? You don't just do one, but you've got a bigger playbook now.
Oh, yeah. No. We're definitely doing a lot of it. Matter of fact, I just had a property, and this is what will happen in this environment. I just had a property that was out on the MLS, and we had it on the MLS, had it on Facebook Marketplace. It's a seller finance property. We beefed the price of it up, because when you're selling an owner finance property, typically you can increase the sales price because you're offering that financing and, giving people an opportunity that way. So on this specific deal, we upped the purchase price of the house quite a bit. And what happened was I actually got a full price offer with somebody that just wants to pay cash for it. And it's like, well, okay, it's going to take another, I get a very big cut off that thing, and, it's going to make sense. But we're doing all of it, between seller financing, creative deals, trying to buy on terms, as well as wrap the note, sell on terms, as well as wholesale, fix and flip. And I do have a rental portfolio. So, we're trying to do it all.
That is awesome. Well, again, thank you, Scott.
Thanks, Scott.